Whenever we start investing or talk about investing in the stock market, normally we read the most about Warren Buffett, how he has made it to where he is today, and what are the companies he invests nowadays. His portfolio is worth $347 billion, and 86% of its portfolio is only in 8 companies, which teaches us a lot of things because he certainly has 50 or more stocks in this portfolio, but 88% of this are only in 8 stocks, meaning that he is kind of diversified, but not really at the same time, with so much focus on 8 stocks only, which is why he says that diversification is a protection against ignorance. It makes very little sense for those who know what they are doing. Now, people like to compare and analyze Berkshire Hathaway more than anything because of their history and track record in return. For every $10,000 invested in Berkshire Hathaway in 1965, investors would have $378.76 million by the end of 2022, while S&P 500 investors would have $2.48 million. So in this video, I want to talk about these 8 companies that he currently has as 88% of his portfolio and why he believes these are very good companies. The first company, I assume all of you already know which one it is, and this is Apple, my favorite company of all time as well. It represents 46.5% of Berkshire Hathaway portfolio, which means that they have 5.8% of stake in Apple itself and has a profit of over 280%. Apple is currently trading at $190 per share with a market cap of almost $3 trillion and a PE of 32.38. It is the biggest public company at the moment. According to Warren Buffett, Apple is a superior company to every single one of Berkshire's subsidiaries. It just happens to be a better business than any we own. Our railroad is a very good business. It is not remotely as good as Apple's business. He believes this mainly because of how loyal Apple clients are. According to Warren Buffett, if people had to give up a second car or an iPhone, they would give up the second car, which is what he likes the most. He explains that he does not like Apple only because of their devices, but more because of the loyalty of their clients and their ecosystem as well. How they make clients feel the need to continue buying Apple products when the time comes. And that is what he believes gives the most value to Apple as a competitive advantage. The second stock in this list in Berkshire Hathaway portfolio is Bank of America, which represents 8.5% of their portfolio, and it is currently up 12.4% in their position. Bank stocks have been near and dear to Buffett's heart for years. Sure, he has cut back on his position in several of these stocks in recent quarters. However, he has held on to Bank of America. He has invested in several banks for years, especially during 2008 crisis. But Buffett decided to invest $5 billion into Bank of America in 2011 during the European debt crisis. This gives Bank of America credibility as a bank and slowly worked through the crisis. This was a nice investment from Berkshire Hathaway, according to this, as they were able to invest during a crisis, and nowadays Warren Buffett sticks to Bank of America as a crisis rock bank stock. Bank of America is currently trading at $29.12 per share with a market cap of $231 billion. The only thing is that the Bank of America was fined $150 million over junk fees and fake accounts. Many talked about how Wells Fargo did that years ago, and now we see Bank of America doing almost the same. Bank of America withheld promises, perks from some of its credit card customers as well, double charge overdraft fees, and secretly opened card accounts in customers' names without their knowledge or consent. I will wait to see if Warren Buffett has something to say about this, but they used to invest in Wells Fargo and didn't sell when the scandal occurred. They definitely decided to close their position last year, but not because of the scandal. but maybe because of the cap that they currently have. The third stock on Berkshire Hathaway portfolio is American Express. It's currently up 212% on its position and represents 7.4% of their portfolio. Excellent investment, if you ask me. I have been trying to start a position in this stock for so long, but I haven't yet. Because of this investment, they currently have 20% of the stake in American Express, which is huge. According to him, you can't create another American Express. I could create another shoe store. I could create another business publication. I could do all kind of things with hundreds of billions of dollars. But I cannot put in the mind of people what is in their minds about American Express. Warren Buffett started investing in this company back in the 1960s during the first wave of consumer credit and during some controversial period as well for American Express. Warren Buffett took the opportunity and acquired 5% of American Express, but then in the 70s and 80s, the credit card boom happened and Amex was a top player in the market. Warren became the largest investor in Amex since 1991. I would love to get into this stock at a price of $130 to $150 per share, but I'm still patiently waiting for those prices. Fourth stock in his portfolio is CocaCola, which represents almost 7% of their portfolio and has a return of 85% at this moment. They have been investing in Coca-Cola since 1988. Thanks to the crisis in 1987, Coca-Cola stock crashed as well, and Warren Buffett understood no competitor was going to appear and take away Coca-Cola's market share. So he took the advantage of the crash as the whole stock market dropped during the Black Monday and started a position in Coca-Cola as well. Stock number 5 in Warren Buffett's Berkshire Hathaway portfolio is Chevron, which represents 5.8% of their portfolio and is up 22.7% at this moment. Don't know if you remember, but oil stocks took a hit in 2020, just like the rest of the stock market. So Berkshire Hathaway started investing in Chevron in late 2020 as the stock was severely undervalued according to them. Since then, they have been adding to their position until recently when Warren Buffett got Chevron's stake by 20.8% last year. Chevron is at $153 per share currently at this moment. Still, even though they sold a lot of it, Chevron still represents almost 6% of their portfolio and is their top 5 stock, which was one of the reasons of why they sold. It was already representing a lot of their portfolio. Stock number 6 on their portfolio is another oil stock, petroleum, and this is Occidental Petroleum Corporation. This one represents 5.8% of their portfolio. It is currently up 22.57% in their stock, and they have been adding recently as well. Berkshire Hathaway started investing in Occidental stock in 2022 and have been adding since then. Berkshire Hathaway currently owns 25.1% of Occidental Petroleum, but they did say last quarter that they are not looking at acquiring the whole company, or at least not yet. Chevron and Occidental both represent a lot of their portfolio and are some of the new additions to their portfolio as they started investing in Chevron in 2020 and Occidental in 2022. Stock number 7 in their portfolio is another well-known company called Kraft Heinz. It currently represents 3.3% of their portfolio and they are down a lot in this position. He started investing in Kraft back in 2015 and they currently own 26.5% of the whole company. Even though they are losing money, they continue holding the position. Still, Buffett admitted in 2019 he misjudged the competition position of fast food brands against Walmart and other retailers' efforts to promote their own private labels. Still, he believes that Kraft has a very strong brands and continue having conviction on the stock right now. The last of this 8 stocks is Moodys Corporation, which represents 2.5% of their portfolio, and they're currently up 820%. They added this stock in their portfolio back in 2000, which is basically a credit rating agency and currently has a rapidly growing data and analytics business as well. It's one of the companies that they have held for so long, as well as some of the ones that I just mentioned at the beginning. Now, after seeing the history behind behind all these 8 positions or stocks in Warren Buffett's portfolio, we can learn several things about Warren Buffett and Berkshire Hathaway and his investing strategy. The first thing that this shows is diversification. The best investors in the world do not use diversification. Yes, we can argue that they are diversified as they own 50 stocks in their portfolio, but 88% of that portfolio is only in 8 stocks that we just mentioned. It is not easy to pick companies who will continue to win for decades to come, as they have done with several, but still we don't need 20 or 25 positions to outperform the market. Just need few quality companies in the portfolio, and that's all, without thinking that all should win. As we saw, they are losing a lot of money on Kraft Heinz as well, but they were wise enough to notice Apple's business as well, meaning that even the best investors in the world make mistakes while investing and lose money. The important part is that at the end of everything, in the long term. Talking about long term, another thing we notice is that their strategy is long term, as we have always known. They have companies they bought back in 1960 like American Express, or 1987 like CocaCola or Moodys in 2000, and even Apple was in 2016, which was 7 years ago. Not only that, but they are not focused on one industry itself, which is something I have been trying to change in my portfolio as well. They are diversified within different industries with several companies at the same time. So what do you think about this? Do you believe these are good or bad investments? And what have you learned so far from Warren Buffett, Berkshire Hathaway, and Berkshire Hathaway? If you want to learn more about how Warren Buffett invests, I'll leave you here a video on what are the criteria he uses to pick stocks. Thank you, and see you next time.